Hi, my name is Trent Kling. I'm one of the co-hosts for the Retail Focus podcast. Sometimes there's a big retail story that breaks at the beginning of the week. Our podcast doesn't come out until the end of the week. So we've decided to begin addressing some of those issues and some of the takes on those issues in an early week video post. That's exactly what this is. This week, our video post is concerning Duluth Trading Company. They just came out with earnings post-market on Tuesday, and largely they disappointed analysts. Analysts had estimates of earnings around 6 cents per share up to around 13 cents per share, while the company didn't release a specific earnings estimate for the first quarter. They came in with just earnings of 1 penny per share. This absolutely tanked the stock price. In fact, in after hours trading, the stock fell underneath a 52-week low, down to $18.15. And at the beginning of trading this morning, when we're recording it on Wednesday, the stock price was actually around $17, which set a new 52-week low for the company. So why all this pessimism surrounding Duluth Trading Company, and more importantly, is this pessimism warranted? Basically, 100% of the market pessimism is born out of this miss on profit. That miss on profit is due to increased selling, general, and administrative expenses. However, as is so often the case, when we dig a little bit deeper, we see reasons for optimism at Duluth Trading Company that honestly many analysts and the market may be missing. Now, we mentioned this miss on profit. If you look here, it was born out of that increase in selling, general, and administrative expenses as a percentage of net sales during this fiscal first quarter of 2017. It increased to 57.2% from 50% last year. But this was driven almost entirely by an increase in marketing costs. In fact, as a percentage of overall sales, their marketing costs came in at over 25%, where it was around 22% last quarter. Now, over 25% is a huge number for a clothing or fashion retailer. When we discussed Chico's a few weeks ago on the podcast, we mentioned how they had advertising costs around 4 to 5% of net revenue. So Duluth Trading Company is aggressively marketing themselves, but it's to a particular end. In fact, they mentioned strength from a number of different lines, but primarily their No Yank Tank line. They've released an ad campaign largely targeting women with this No Yank Tank line, and management says it is seeing an increase in expenditures, and this could potentially provide great balance in their demographics going forward, as it's a product that no one else is marketing currently. This campaign was the major reason for the increase in advertising expenditures. Eventually, you figure that the law of diminishing returns will come into play here, and that advertising amount will be capped at some point in the future for Duluth. But then you look at some of the underlying numbers, and here's where we have reasons for optimism. Originally, they had expected to open just 10 to 12 new brick and mortar retail stores for fiscal year 2017. Now they're increasing that number to 13. And these just aren't targeted new stores or stores under development. These are stores they've either actually opened in the first quarter or have leases already signed for. So that is a reason for bullishness surrounding Duluth Trading Company, especially when you take a look at their retail sales. Their retail brick and mortar sales have jumped up massively. Retail stores saw a 139.7% growth in sales over the same quarter last year, despite only increasing their store count by 9 between the end of the first quarter last year and the end of this year's first quarter. That increase of 9 was from 11 stores. So you look at the numbers there and you can see very reasonably that although the store chain doesn't give out same-store sales numbers, their same-store sales numbers are positive in the stores that have been open at least 1 year. Some of the other signs for bullishness surrounding Duluth Trading Company and some of the other signs for optimism is the fact that net sales did increase once again year over year to $83.7 million. That's an over 20% increase, in fact 21.9% increase. And you might be saying at this point, well, Trent, didn't they mention they had a really soft February, and weren't e-commerce sales not growing at quite the rate they had expected? Well, e-commerce sales are still growing at a rate over 5%. but the company, if you were on the earnings call, mentioned that this was primarily due to the lack of feature sales or clearance sales in February. In fact, the company is operating at such an efficient clip. They didn't have a lot of clearance merchandise in February when their online customers were expecting it. As such, their e-commerce sales took a hit from last February when they had plenty of clearance sales to go around. When you look at the March and April sales numbers, those are very positive for Duluth in the e-commerce realm. So you combine brick and mortar sales with e-commerce sales, and you can see that overall top line revenue is going up for the company. Now they just have to find a way to be a little bit more efficient on the bottom line. And we believe that over time, that day will come as their advertising expenditures tail off. We hope you've enjoyed this week's Retail Focus video update. I'm Trent Kling. As always, you can check out more on the Duluth story on the Retail Focus podcast. That'll be up later this week. It's presented by our sponsors at Third Wave Water and thirdwavewater.com. Go check them out. Use the promo code FOCUS for 10% off your first order. As always, we may have positions in or against companies we discuss either on the podcast or on the video series. Do not invest in stock solely based on our input. Until next time, so long.